Bitcoin, the world's most famous cryptocurrency, has witnessed remarkable price movements in recent times, gaining over 20% in value within a week. This bull market has generated substantial enthusiasm, with many attributing it to the expectation that the U.S. Securities and Exchange Commission, SEC, will soon approve exchange-traded funds, ETFs, offering exposure to spot Bitcoin prices. The anticipation of this regulatory green light is not only a major event in the history of the ETF industry but also a pivotal moment in the world of cryptocurrency. However, the excitement surrounding spot Bitcoin ETFs is not without its uncertainties. Speculation, even if widespread, does not guarantee regulatory approval. Therefore, the influence of ETF approvals on Bitcoin and related assets, such as Bitcoin mining equities, remains a subject of intense debate. In this article, we explore the dynamics of the evolving crypto landscape, delve into the significance of Bitcoin's correlations with traditional assets, and analyze the potential of Bitcoin as a safe haven asset in the face of geopolitical risks. Market comments and observations. The cryptocurrency market is at a critical juncture, with Bitcoin's price showing impressive gains over the past week. This surge is largely attributed to the widely anticipated approval of spot Bitcoin ETFs by the SEC. The market sentiment is overwhelmingly positive, with investors and enthusiasts eagerly awaiting this landmark decision. The cryptocurrency space has experienced significant volatility over the years, but the potential approval of spot ETFs is seen as a stabilizing force. It promises to bring a new wave of institutional investors into the market, leading to increased liquidity and potentially reducing price volatility. However, it's crucial to note that regulatory challenges and concerns about market manipulation still loom large. While the market is optimistic about ETF approval, there's a recognition that the SEC's scrutiny and the need for robust investor protection measures are not to be taken lightly. The market will closely watch how these regulatory challenges are addressed in the coming months. The spot Bitcoin ETF frenzy. The idea of a Bitcoin ETF, especially one offering exposure to spot Bitcoin prices, has long been a holy grail for cryptocurrency enthusiasts. ETFs provide a way for traditional investors to participate in the cryptocurrency market without directly holding or managing digital assets. It's a form of institutional validation that could potentially attract significant capital into the crypto space. The SEC has been reviewing various Bitcoin ETF proposals for years, and their hesitance to approve such funds has been a point of frustration for many in the crypto industry. While other countries, such as Canada and Europe, have embraced Bitcoin ETFs, the US has been cautious in its approach. Spot Bitcoin ETFs are particularly exciting because they would offer investors direct exposure to the underlying asset, which is the physical Bitcoin itself. Unlike futures-based ETFs, which derive their value from futures contracts tied to the price of Bitcoin, spot ETFs would enable investors to own real Bitcoin, akin to holding physical gold. Market comments and observations. The potential approval of spot Bitcoin ETFs is a hot topic in the cryptocurrency market, and its implications are profound. The market sees this as a watershed moment, with the potential to reshape the landscape of cryptocurrency investments. The market's reaction to the anticipation of spot ETFs has been overwhelmingly positive, and Bitcoin's price surge over the past week reflects this optimism. Traders and investors are closely monitoring regulatory developments and positioning themselves to capitalize on the expected influx of institutional capital into the market. The cryptocurrency market has evolved significantly, and it is increasingly being viewed as a legitimate asset class. The potential approval of spot Bitcoin ETFs is a testament to this maturation. However, it also underscores the need for a clear regulatory framework to address concerns related to market integrity and investor protection. The approval of spot Bitcoin ETFs would not only make Bitcoin more accessible to traditional investors but also open the doors for other cryptocurrency assets to gain institutional recognition. This could mark the beginning of a new era for the crypto space, characterized by greater liquidity, reduced price volatility, and broader acceptance. Challenges and uncertainties. The potential benefits of spot Bitcoin ETFs are undeniable, but they come with their set of challenges and uncertainties. Regulatory hurdles. The SEC has voiced concerns about market manipulation, fraud, and the need for investor protection in the crypto space. These concerns have been primary roadblocks to ETF approvals. Overcoming these regulatory hurdles is essential for the successful launch of spot Bitcoin ETFs. Market manipulation. The cryptocurrency market is known for its susceptibility to price manipulation. Ensuring fair and transparent market conditions is critical for investor confidence. The market will be closely watching how ETF providers address this issue in their proposals. Custody solutions. ETF providers would need secure custody solutions for their Bitcoin holdings. The industry needs robust and institutional-grade custody solutions to safeguard digital assets, and this requirement is a significant infrastructure challenge. Market maturity. The cryptocurrency market, despite its rapid growth, is still relatively young compared to traditional financial markets. A more mature market with well-established trading practices and infrastructure would be better positioned to support the successful launch of ETFs. Market comments and observations. The challenges and uncertainties surrounding spot Bitcoin ETFs are being carefully analyzed by the cryptocurrency community. While optimism prevails, there is a clear understanding that regulatory hurdles and market manipulation concerns are not to be underestimated. The market is keenly interested in how ETF providers will address these challenges. Solutions that prioritize transparency, investor protection, and fair market conditions are likely to find greater acceptance among regulators and investors. The cryptocurrency market's continued evolution and maturation are evident in its ability to acknowledge these challenges and work collaboratively to overcome them. The potential benefits of spot Bitcoin ETFs are substantial, and the market is eager to see how these hurdles are surmounted. Bitcoin correlations, a sign of maturation. Beyond the spot ETF hype, there is an intriguing development in Bitcoin's correlation with traditional assets, particularly equities and gold. These correlations offer valuable insights into the evolving nature of Bitcoin as an asset class. Correlation with equities. Recent data indicates that Bitcoin's correlations with traditional equities, such as the S&P 500 and the Nasdaq 100 index (NDX), are showing a decline. This decrease in correlation suggests that Bitcoin is becoming less tethered to the movements of traditional financial markets. While this does not mean Bitcoin is entirely uncorrelated with equities, the trend is moving in that direction. The decline in correlation can be interpreted as a sign of Bitcoin's maturation as an asset. In its early years, Bitcoin was often considered a speculative and highly volatile investment. As it becomes less influenced by the movements of traditional assets, Bitcoin may be seen as a more stable and independent store of value. Market comments and observations. The declining correlation between Bitcoin and traditional equities is a significant development in the cryptocurrency market. This trend underscores the idea that Bitcoin is becoming more independent and less influenced by external factors. This reduced correlation with equities is seen as a positive sign by market participants. It indicates that Bitcoin is emerging as a distinct asset class, one that is not solely reliant on the dynamics of traditional financial markets. The market is observing this trend with great interest, as it may lead to a more stable and resilient cryptocurrency market. Investors are increasingly viewing Bitcoin as a potential diversification tool for their portfolios, given its decreasing correlation with equities. This shift in perception could lead to a broader adoption of Bitcoin by institutional investors looking to mitigate risk. Correlation with gold. In contrast to its weakening relationship with equities, Bitcoin's correlation with gold is on the rise. This development is significant because gold has long been considered the ultimate safe haven asset during times of economic turmoil and geopolitical instability. Bitcoin has been frequently referred to as digital gold by its proponents, highlighting its potential to serve as a modern alternative to traditional safe haven assets. The increasing correlation between Bitcoin and gold suggests that the cryptocurrency is taking steps toward fulfilling this role. Market comments and observations. The strengthening correlation between Bitcoin and gold is a noteworthy development that the market is closely monitoring. This association with gold, a time-tested safe haven asset, is seen as a step toward Bitcoin gaining acceptance as a reliable store of value. During periods of economic uncertainty and geopolitical turmoil, gold has traditionally been a go-to asset for investors seeking safety. The fact that Bitcoin is increasingly linked with gold suggests that it is moving in the direction of becoming a trusted option for risk-averse investors. Market comments and observations. The idea of Bitcoin as a safe haven asset is gaining traction, and market participants are closely observing how it continues to evolve. The increasing correlation with gold is seen as a significant step in this direction, but it is not without its challenges. Bitcoin's notorious price volatility remains a concern for conservative investors seeking stability during turbulent times. The market recognizes that for Bitcoin to be accepted as a genuine safe haven asset, it needs to demonstrate resilience and stability during economic and geopolitical crises. The regulatory environment also plays a critical role in determining Bitcoin's status as a safe haven. The market expects regulatory frameworks to provide investor protection and reduce the risk of market manipulation. Regulatory clarity is essential to foster trust in the cryptocurrency as a safe haven asset. Conclusion. The recent surge in Bitcoin's price, driven by the anticipation of spot Bitcoin ETFs and its evolving correlations with traditional assets, reflects the growing maturity of the cryptocurrency market. While the approval of spot Bitcoin ETFs could mark a significant milestone in Bitcoin's journey to mainstream adoption, the crypto space still faces regulatory challenges that need to be addressed. Moreover, the changing correlations with equities and the strengthening ties with gold suggest that Bitcoin is on the path to becoming a recognized safe haven asset. However, it is essential to acknowledge that Bitcoin's price volatility, regulatory uncertainty, and the relative youth of the cryptocurrency market pose challenges to its establishment as a reliable safe haven. As the crypto landscape continues to evolve, investors and enthusiasts will closely monitor these developments, looking for signals of Bitcoin's potential as a non-sovereign store of value and a dependable asset during times of economic and geopolitical turmoil. Bitcoin's journey is far from over, and its role in the financial world is still unfolding. Market comments and observations. The cryptocurrency market is in the midst of a transformative phase. The potential approval of spot Bitcoin ETFs and the changing correlations with traditional assets have injected a sense of optimism into the market. Investors and industry stakeholders are looking ahead with great anticipation, eager to witness the next chapters in Bitcoin's evolution. One of the key market sentiments is that the cryptocurrency space is rapidly maturing. It is shedding its image as a speculative and highly volatile market and moving toward recognition as a legitimate asset class. This maturation is driven by the gradual reduction of Bitcoin's correlation with traditional equities, which is seen as a sign of greater independence and resilience. The strengthening correlation between Bitcoin and gold is also viewed with enthusiasm. It opens up possibilities for diversification and positions Bitcoin as a modern alternative to traditional safe haven assets. The market sees this as a step toward Bitcoin's acceptance as a reliable store of value. The challenges and uncertainties related to regulatory approval of spot Bitcoin ETFs are acknowledged, but they are not dampening market enthusiasm. Investors and industry players are actively engaging with regulators and working to address concerns related to market integrity and investor protection. In conclusion, the cryptocurrency market is standing at the threshold of significant developments. The potential approval of spot Bitcoin ETFs and Bitcoin's evolving role as a safe haven asset are transformative forces that will continue to shape the future of the crypto space. The market is vibrant, resilient, and determined to overcome challenges, all while embracing the opportunities that lie ahead.